Inventory remains at record lows, 51% in fact below pre-pandemic levels, driving home prices up despite the Fed's ongoing efforts to raise interest rates to cool that housing market off. In 95% of the major US markets, we've seen inventory drop, with the biggest swings in the western metro areas, including Phoenix, Arizona, Boise, Idaho, Ogden, Utah, San Francisco, California, and Colorado Springs, Colorado. Late last year, each of these areas had reached inventory oversupply as the home sales slowed.
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home, right? Let's dive into the data. Compared to pre-pandemic levels, supply has increased by 30% year to date. Now, with a combination of higher prices, scarcity of real estate, and those higher interest rates, many buyers are holding back and hoping that their ability to buy is going to improve in the coming months. Now, though, potential sellers out there who have locked into interest rates when they purchased of 5% or less, they're less likely to want to put their homes on the market until they start and see more favorable interest rates so that they can sell their home and move up or down. But with the growing supply of multifamily rentals, what we're seeing is a lot of sellers deciding to sell now while the prices remain high, even though interest rates aren't as attractive for their next purchase, and they're electing to rent in the short term. And certainly in our local area, Newport Coast, we're seeing a lot of new listing lease inventory coming to the market. In May, it took 35.7% of the median household income to afford that median home, and that's for the principal and interest mortgage payment. So if it wasn't for income growth that we saw in 2022, May 2023 would have been the most unaffordable month for home purchases in the last 37 years. Wow. Black Knight's May report shows just how much home prices have increased since they fell off in 2022. San Jose, California is a prime example. Last year, homes in this metro dropped 10% faster than any other metro market. Now, with inventory falling, we're seeing a 1.4% price increase for the month of May. That's the second largest price increase in those US metro areas. 6 Western markets have had the biggest month-over-month price increases, and here's the list. San Jose 1.4, San Diego 1.1, Los Angeles 1%, San Francisco 0.9, Seattle 0.9%, and Sacramento 0.8%. Leading all in home price growth is actually on the East Coast, and that's in Hartford, Connecticut at 1.6%. With its potent mix of relative affordability, strong buyer demand, and the largest inventory deficit of any US market, standing right now at negative 82%. Home price growth may be good news for sellers if they're inclined to sell and if they're able to rent back in the short term. Obviously, buyers are going to be less than thrilled with this news as we start to see interest rates edge over 7%. Each person's situation, you have to remember, is different, just as each market has a unique set of factors that are dictating what happens in each locale. Make sure you click on the video that's on your screen right now so that you can see the next video in my market update series. Click on it now, and we'll see you there. The Room.